Hi, Neil Young, the Managing Director of Elixir Energy. It's now only a few days before Christmas and therefore quite timely to look back at what our company has achieved in 2024 and what we see coming up in the short term and throughout 2025. So firstly, let me start with the market context. Our main asset is in Queensland. It's natural gas. It's very well located, proximate to infrastructure. Now, the East Coast gas market faces significant problems from a consumer point of view, which is good for us as a putative supplier. The crisis is nearly upon us. In 6 months' time, we could see gas shortfalls in Victoria and New South Wales. In 18 months to 24 months, we almost certainly will. New gas supplies are therefore urgently required. They're going to come in by boat, liquefied natural gas, LNG. That's almost certainly going to happen in New South Wales and possibly in Victoria. That gas is going to be expensive. It's going to be $20 a gigajoule or thereabouts at least. Other alternatives in Australia basically are much further away than our project in Queensland's Taroom Trough. For instance, in North Queensland or the Northern Territory, they're not connected by pipeline. They are quite a number of dollars more expensive to bring to market than the stuff that we're chasing. So that market context is very, very good for us as a supplier, not so good for customers who might face those problems. Now, the government nationally and at state level is increasingly recognizing this. The national government created problems in the gas market a few years ago, which are going to come back to bite them by interfering and trying to suppress prices. Prices have in effect risen because of that government intervention. Now, it's pleasing to see as a company in Queensland that the new government there is very, very supportive of gas, is keen to break through red tape and green tape barriers to rapid development. And we're already seeing that in our engagement with them, which is very, very pleasing. The regulator in Queensland is highly supportive of the industry, and we expect that to only increase. So that's a fantastic macro context for what we're doing. So what have we as a company done in 2024 in response to that environment? Our focus this year has been taking the Daydream 2 appraisal well from its drilling finalized pretty much a year ago, and then undertaking stimulation and flow testing work on that. That has been a highly capital intensive and resource intensive exercise. This is a very deep and exciting high pressure well. We've garnered enormous data from the work that we have done on this. Just to take some few examples, we've confirmed that the gas in the Taroom Trough is very low in carbon dioxide. That's enormously valuable in terms of it means you don't have to spend money on taking it out. It means that the parties who might be prepared to partner with you are not excluded from high CO2 plays. It's got less tax risk on it from future carbon taxes, etc. So that's an enormous tick. Secondly, we confirmed that the gas in the deep part of the Taroom Trough where we've been drilling is what's called overpressured. That means the pressure is higher than one would expect just from the normal overburden above it. Overpressure means the gas wants to come out at a higher rate, which means all things being equal, economics are better. You'll get more gas recovered per well. We've affirmed that. Now, for the first time ever, we undertook sampling from the deep coals in the Taroom Trough, and to our considerable surprise and considerable excitement, we found that the gas in those coals was much higher than anyone ever thought. That means the gas in place in the Taroom Trough is quite a bit larger than anyone thought. This adds probably tens of trillions of cubic feet of gas in place in the overall play. Even with a very small recovery factor, that's going to add to a lot of potential additional gas resource. Now, just going a bit out of order, we actually flowed gas from those coals as well. No one had ever done that. That was at depths of about 3,400 meters. That's certainly the deepest flow from a coal in Australia and possibly the world outside China. So that's a fabulous achievement from a small company. And we anticipate in the very short term, we will provide an update to our contingent resources to reflect that. Now, speaking of contingent resources, generally, we put out a number of updates this year on our resource numbers. They've only been increasing based on the work that we've done. We now sit as a company with a very large resource base. If we divide the resources by our market cap, it's a very low number. And we expect that number to rise, in which case our share price will appreciate potentially significantly. By drilling and completing and stimulating and flow testing our well, we had met all the commitments under our license. That means under Queensland's petroleum law, we can apply, and we are applying for a retention lease, which means that we can hold the license for 15 years without doing any more material work. Therefore, if we spend money on this, it's because we want to, not because we are required to. We can control our own capital expenditure destiny here. Now, finally, flow testing the well. We flow tested various parts and we had some disappointment at the end. That has been reflected in our share price, which has risen up to 16 cents at one point, now down to just over 4. Clearly, that's disappointing to our shareholders and, of course, to us as management and the board of the company. We consider that to be a gross overreaction, given the considerable achievements that we've maintained throughout the course of the year. And I think that was really down to the final flow rate being a bit less than earlier flow rates. Now, why did that happen? Our technical analysis indicates that happened not because of some intrinsic geological problem that cannot be fixed, but rather because of operational issues that arose, for instance, when equipment was going backwards and forwards between various operators in the region. We therefore consider that to be eminently fixable in any future wells that we want to undertake. In terms of future wells, we are planning an appraisal program going forward at our discretion. As I said, we're not obliged to do anything here under the terms of our license. We're engaging with potential partners to assist us in this program, the sort of companies who this play needs and deserves, the sort of companies who want to develop big assets like this in this part of Australia. Now, that is no better exemplified than the work being done by our immediate neighbour to the west of our license, Shell. Now, Shell is spending money on one exploration appraisal project in Australia, the one next door to us, on no other ones. They're spending hundreds of millions of dollars there in the last few years, and speaking to them, their current plans, and obviously they can't confirm this publicly, but their current plans are to spend considerably more. We absolutely welcome that. That's a massive endorsement of what we are doing, and it's a massive endorsement of others potentially entering the play with us as a partner. Now, big companies don't move quickly, they move at their own pace, but shareholders can rest assured that that process is one of active engagement, and during the course of 2025, we expect news on that. Now, we also acquired a new license adjacent to our Heartland 2044. That has two parts which are very analogous to the Grandis deep tight gas play, and we've added resources in those two areas. It also has a separate geographical part which are shallow conventional targets. Our plans in 2025 are to drill a conventional shallow target in that play. It's located immediately adjacent to infrastructure, so if the well comes good, it can be converted into cash flow within months. Now, our plans are not to spend money on that well ourselves, but rather to bring in a partner to carry us through the cost of that well. We're in advanced discussions about that. Now, clearly no deal is done until it's done, but we anticipate good news on that in the short term. All up, there's a lot happening in our play. We've achieved an enormous amount. Next year is one where we and our neighbours will continue to de-risk this play and deliver the gas at high prices that East Coast Australia desperately needs. Now, the market here isn't only East Coast Australia. The LNG plants in Queensland are operating below full capacity. They need more gas. That's why companies like Shell are drilling here to supply domestic and international markets. And equally, the type of party who we're engaging with here as potential partners are also fully aware of that opportunity. Australia continues to be one of the top 3 gas suppliers in the world. Companies in places like Korea and Japan value Australia's gas supplies and a geopolitical relationship that we have. And we expect those companies also to be interested in this play side by side with the capable operators that we're engaging with. Now, we also have an asset in Mongolia that we've been pursuing for a number of years. Clearly, it has not been our number one focus because we believe the Grandis gas project to have considerably more upside to it. However, we are engaging with potential partners on the Mongolian play to bring financing and de-risking to that also as we go forward. So all up, Elixir's got a great 2025 coming up, building on a solid 2024. We know shareholders are disappointed with the share price reaction that we've had in the last quarter, but all I can say is that share markets go too excited and they go too pessimistic. But in the long run, they revert to true value, and our very strong view is that true value is considerably higher than we currently sit. So we look forward to that reversion happening. We will deliver upon our achievements through the sort of deals that I've mentioned earlier, and also some others that you might not necessarily expect. Elixir's got a fantastic track record of undertaking commercial deals. We've demonstrated that in the last few years. For instance, on the funding that we obtained for Origin Energy as contributing towards the Daydream 2 well, through the R&D funding that we've procured for this, and which we expect to continue to going forward. So that's it from myself. Thank you for your interest and support.